All right, welcome to the LazimILLENNIAL Lounge, friends. Iyanna Vaughn is here with us to bestow some finance knowledge upon us.
Thank you so much, Megan. It's so great to be on.
This series of the LazimILLENNIAL Lounge podcast is dedicated to aspiring or early stage entrepreneurs and business owners. So if that's you, you want to make sure you subscribe, like, hit the notification bell so that you know when new episodes are available. Today, I brought in a financial strategist who is going to break down what all you need to be looking at, paying attention to, filing, keeping track of to make sure that your finances are in order. Even if you have not made a single cent, not one red cent from your business, you need to lay that good foundation so that you have a strong foundation to build from as your business grows. All right, so I brought in Iyanna Vaughn, who's a financial strategist and the founder of the Lovely Financials Group, so you lay it all out for us. So I like to start out by getting a little bit of some background context about our guests. So what did you think you were going to be doing with your life around the time you graduated from high school, and how does that compare to what you are actually doing right now?
That is so funny. Okay, so at the end of high school, I thought that I was going to be a therapist. So I thought I was going to be like a counselor and a psychologist, really, a psychologist at the end of high school. And then when I got into college, family was like, okay, actually don't do psychology, do be a nurse. And I was like, okay, I'll do pre-nursing. So I took a few courses and everything. I switched my major to healthcare management because I did not see myself being as hand-eye coordinated to take care of someone physically. And then as I was in healthcare management, I took an accounting course. And that's where I, oddly enough, fell in love with accounting. My professor, he asked me and another student to help tutor the accounting students on the weekend. So we would volunteer our time to do that. And then I had a dream that I would be a CFO to a hospital. And towards the end of my college career, I was pregnant with my daughter. Okay. And it switched from, okay, CFO, going back for accounting, going back for finance, to, okay, let's just finish this major so I can give birth and be done. So then after my daughter, this is a story that's gonna come back to where it is today because I have such a unique background. Mm-hmm. But after giving birth to my daughter, I shortly after became a foster mom to adults with special needs. And I literally was in my early 20s, I became a mom of 3 overnight. I put air quotes because it's I'm not a mom per se to everyone, but I acted as a mom to 3 overnight, essentially. And long story short, I was extremely overwhelmed and I needed a creative outlet. So I started blogging, doing some crafts and everything like that. So I was a fake blogger for a little while. But when I was online, I saw a lot of women in online business crushing their businesses and everything. And I was like, oh, this is so awesome. Women are online literally getting paid to be who they are authentically. Mm-hmm. But one thing that they were afraid of was money and taxes. Mm-hmm. And I was like, why can't I serve them in a way where, I was pretty good in accounting and I understand numbers and everything like that. Why can't I be of service to them so that I can, help them know, that they don't have to be stuck in that fear of their money. Right. So to answer your question, what I wanted to be then to where I am now, I'm pretty much a CFO to small businesses who run their businesses online. So it was vast difference from where I was in high school to where I am now.
Look at the A and the Z is so different, but then when you describe the path, it's oh, these things are connected. So it's funny how that happened. My mom and my brother are both accountants. And I never really understood what they saw in accounting that made them want to be accountants. I did not understand that. But in pharmacy, I'm a pharmacist. So in pharmacy school, we had to take I forget what it was called, but it was basically an accounting course. And it was very, very basic, fundamentals of accounting. It might have even just been a management course and we just had an accounting module in it. And I was like, oh, okay, I can get how, this is fun for someone. It was cool. Right. It didn't make me want to go be an accountant, but it was nice. I liked working with the numbers and making everything balance and work, and that was fulfilling.
Exactly, because you're making a story in a sense. Like
Yeah.
when you get all these pieces together, it's like a puzzle that comes together to say, okay, this is what this business is, and this is
Mhm.
how it performed, and how can we make it better, you know? So that was my big thing of like, okay, to me, accounting is making the story out of numbers.
Mhm. So
Yeah.
did you immediately, like when you discovered this group demographic of people who you thought could use your help, is that when you created Lovely Financials? Like was that business that was created then at that point?
No, so I started like a VA business where I did some virtual assisting, I did some design. I had all these different
You're a
talents, quote
multi-passionate
talents.
person.
Yes, multi-passion. Thank you. And so I was doing that for a little while, and then I came across a program that helped me conceptualize like my accounting knowledge that I had from college and create it into a business.
Mhm.
And taking the program, I was able to kind of like refresh myself with everything and actually be systematized so that I can take someone through a process and be confident that I can deliver that service, right? So I took that program in 2015. Early 2016, I started my LLC, and then I was like, okay, yes, I'm official. But even then, the business wasn't Lovely Financials Group. It was under another name, really similar. It was like Lovelypreneur. Just like, okay, what does that even mean? So,
Growth. Growth.
right, exactly. So yeah, I started off doing more so subcontracted work with other established accounting firms and like doing the bookkeeping, and then I ventured off into like my own like bookkeeping work with my own set of clients. And from then until 2017 I went full-time ish, like I was still doing my host parent thing, and
Mhm.
then I ventured off into myself completely at the end of 2017. And of course, my business had very different stages of
Mhm.
itself to where it is today. So, yeah.
So what is it that you do today? Can you give us an overview of the services you provide and who you work with?
For sure. So now I do like outsourced CFO work where I help business owners like basically understand what their goals are and then create a specific plan to get there. And that is through what I like to call financial strategy, which is like telling your numbers what to do, understanding what happened in the past to tell your future what to do. So we do this by, doing sales forecasting, like projecting sales. We have cash flow forecasts where we say, okay, this is what cash flow is going to look like. And then we trim it down to like, for the entrepreneur, it's like, what do I have to sell? You're going to tell me all these numbers, but what does that mean with my marketing and how much I have to sell? So we kind of make it make sense for them to say, okay, if your goal is this, then you need to sell to this many people so
Okay.
that you can convert to this amount. So what I mean by convert, it's like, okay, if you want to sell to one person, you would probably have to get in front of at least 5 people to convert that one person. But understanding the trends to know what that conversion rate is what we help our clients with as well.
Cool. So it's kind of like setting your financial goal and then
Mm-hmm.
figuring, like working backwards to figure out what you need to do in order to meet that goal.
Exactly.
Okay.
Exactly.
Cool. That sounds very helpful. So, for someone who has not yet started their business or is in the very early stages of starting their business, what are the fundamentals of like finances that people really need to be focused on? Like, is it revenue? Is it expenses, profit? Like, what are the basics that people need to keep in mind at that stage of business?
I think the very first thing that you need to do is separate the two different entities. Separate your business from your personal.
Okay.
Because if you go from saying, okay, it's just one gig after the other and you're commingling, and then it's like you don't even know what's going on, right?
Mm-hmm.
So the first thing you want to do is separate your business from your personal. And that means having two separate accounts at least. Then you want to track your finances. So of course, I like to visualize like my revenue tracking. I like to say, okay, I made this much today. How close am I to my revenue goal? how much do I have left to reach my revenue goal for the month?
Mm-hmm.
So, tracking your revenue. And of course, if you have like an invoicing system, making sure that you have, a proper invoicing system so that you have a way to make sure that you're getting paid and that you're following up on it.
Mm-hmm. Do you have any preferred systems? Because I know there are a lot out there, like a lot of options, free, paid.
One that I really like right now for like an invoicing system is a CRM called Dubsado.
Okay.
And that's Dubsado for anyone who hasn't heard about it. So I like that because it kind of merges like your client relationship like with email, so
Mm-hmm.
that you can have a workflow, so you can have a set of like templatized emails to send to someone or prospective client. Then it also has like your contracts or service agreement templates in there, so someone can digitally sign their contract or service agreement. Then it has your invoicing system so that you can invoice those clients as well. So that is all kind of umbrellaed under one system. Now, I'm not the biggest fan of their bookkeeping aspect of the software, but I'm a huge fan of their invoicing and client relationship.
Okay. Yeah, that's what I use Dubsado for the client management aspect. So it's really convenient to have like the projects and the email templates and all of that. Yeah, I like it a lot.
Exactly.
Okay. So we've separated our business from personal, and I will likely publish. So I also had an episode with a person, two legal experts who came to talk to us about LLCs, sole proprietorships, business legal structures. And so I'll probably publish that episode for the listeners before this one, because that probably comes before, your financial considerations. So we're making sure that our business and our person are separated. We are tracking our revenue through some type of, software tool. And then what is the next step after that?
Definitely getting on an accounting platform so that you can track your expenses. There's a huge misconception that your bookkeeping, which is like tracking, your financials for your business, starts as soon as you make revenue, but that starts as soon as you spend your first dollar in your business, right? Because we are investing in our businesses before we even make money, but we need to keep track of that. So, you may have, someone who's starting, they may have already invested a couple of things in their business before they open their account. That's totally fine. Just make sure that you're documenting what you're spending so that you can then, on one hand, track that for a deduction and then pay yourself back eventually. So, accounting softwares that I like and that have been popular before, I haven't used this one in a while. It's called Wave Apps. That's a free software that's pretty good, pretty a standard one when you're beginning. A lot of people use QuickBooks Self-Employed. I'm not the biggest fan of that one, but it's really affordable and it's pretty standard to use and track your expenses as well. But what I do gravitate towards is two different softwares called QuickBooks Online, and then the other one, Xero, that's Xero.
Okay.
And that is going to grow with you in your business.
Xero.
Both QuickBooks Online and Xero.
Okay. What's the difference between, you don't have to go into super detail, but what's the difference between QuickBooks Online and QuickBooks Self-Employed?
So the self-employed, in my opinion, doesn't give as much detail as the online version does.
Okay.
And I think you only get a certain amount of transactions on the self-employed version, but it is helpful for you to like track like, okay, what is your estimated taxes? That's really helpful for someone starting out too. And then if you have a business where you need to track your miles, that's another thing that the self-employed version has as well. But what I found was I'm huge on the detail. And a lot of the times the income streams was under like one line item. But if you have a business that is growing and you have different revenue sources, you need to know exactly what's working in your business and what's not. But I'm not against it when you're just starting at all. So if that's something that you want to use, of course, go ahead and use it because it's the most easiest for you. But as you grow, it might be a little bit of a hassle to go from one to the next.
Right.
So just putting that option of saying, hey, you can start on this robust software, then it can just grow with you in your business.
Gotcha. Okay. So we've got our accounting platform, and then that between the accounting platform and then our invoicing tool, that's going to give us a lot of the information that we need for our financial documentation, right?
Exactly.
Is it going to give us everything? Like, is there anything else that we need, or is that pretty much the core?
So the invoicing, of course, is going to give you all of your revenue sources, and then it should match up with your accounting platform.
Okay.
So that you can also track it there, make sure that they both, line up and they could integrate with each other as well. And then both the accounting software will be able to track your expenses so that you are tracking the necessary deductions. And then also you're understanding, okay, what is my business spending on a monthly basis? So that I can know what is my bottom line, which is my profit. And, just thinking, is that somewhere where I want to be, or how can I make goals, based on these numbers? Because I'm a true believer in, you need to really know your numbers so that you can get to where you want to be in the future.
Okay. So since you mentioned profit, perfect timing to bring that up. Can we shed some light on, because I know on your podcast, the Major Margins podcast, you take the time to give distinct descriptions of the differences between like revenue, profit, cash flow. Could you give us a summary of what those things are and what the differences are between them?
Yeah. So a lot of times in online business, we hear interchangeable words, right? We're like, okay, income, revenue, profit. But I'm like, okay, let's just get it all aired out and just like say, what are they?
Yeah, because it all sounds like money. It all just sounds like money. It's like, what? Okay, but why? What is that though?
Exactly. So revenue is basically like the sales that you get in a period of time, like all the incoming sales that you get, right? And then expenses, of course, is like anything that you've taken out to spend on the business, to invest in it. The bottom line is the profit. That's basically what you retained in the business after you've spent your money. Make sense?
Yep.
Awesome. And then with cash flow, now cash flow also includes things that are outside of your expenses. And that can be like you paying yourself, because if you are a sole proprietor LLC, whatever you pay yourself isn't going to be an expense. It'll just be part of like your equity in the business that you're taking out. So your owner's draw. So cash flow includes all the cash that's coming in. That can be your revenue. That can also be, say you're investing in your business, you're putting some money into your business so that you can have some cash in it.
Okay.
And then, if you do, let's say, as another example, I know a lot of people who are just starting out, they're not necessarily going to take a loan, but that can be like a loan, disbursement. You're getting a loan, so that's cash coming in. Money going out, that's all of your expenses. So that's like your team, if you have a team, your expenses for your digital software, some ads, anything like that. And then also cash going out can be your owner's draw. And that can also be you paying back your loan. That's another cash going out.
Okay.
And, or if you're investing in the business, like you bought some equipment, that could be another source of cash going out.
Okay.
And then at the bottom is like basically your net cash change. So all incoming cash minus outgoing cash equals your net cash change.
Is that the same thing as your cash flow, or is that something different than your cash flow?
That is your cash flow. So cash flow is basically incoming cash minus outgoing cash, and then your net cash change.
Gotcha.
But it's different than what's on your bank balance.
Right. And can you explain why that is different? Why what you see on your bank balance might not be your net cash change?
Because you may have started your bank account with like $500. So $500 plus another $5,000 minus $3,000. Of course, your net change is going to be different than that ending cash balance.
Okay. When you mentioned the owner's draw, I think that's the term. Owner's draw. That's the term that sometimes throws people off. What is the difference between your owner's draw, your I guess your salary, if you want to call it that, and your profit?
Yeah, so this also aligns a lot with, I believe your attorney may have mentioned like the different way, like the different structures of businesses.
Yes.
But just to reiterate that, and also from a tax perspective, there's different ways that you can be taxed as in a business.
Okay.
One way that we all are probably going to be taxed as at first when we first start our businesses is as like a single member LLC or sole proprietor. Those are the same things. So when you have profit in your business, that's basically what you can draw out from the business. Your profit is basically the same as your owner's draw. It could potentially be there unless you keep it into the business.
Got you.
So let me paint a picture of because you have to understand the three different statements. So the first statement, well, I'm going to get into three financial statements.
Yep, go ahead.
So the first one is the income statement. So you have your revenue, what we talked about before, minus your expenses, equals your profit.
Okay.
On the balance sheet, that tells you three different things: what you own in assets, what you owe in liabilities, and what's left over in equity. So what you have in assets is basically like your bank account balances. If you invested in like some equipment, that's also an asset. Liabilities would be basically what you owe. So that could be like your credit card balance, or that can be you paying off a loan. And then equity, basically what's left over is the profit. So you might draw from what's left over in the profit. You might put money back into the business for owner's investment back into the business. Okay. So the equity can kind of grow or decrease based on what you take over from what's left over, which was the profit from your income statement.
Okay.
And then what we talked about before, the cash flow, that's the third financial statement that you can look at to understand your business finances. And again, that was all cash coming in minus all cash going out, and then your net cash change. Now in that, there are three different things that go into that, but to simplify it, just all incoming, outgoing, net cash change.
Okay. So with these financial statements, for someone who is like about to start their business or has just started their business, do they need to be focused on like just having these statements for their personal benefit and for their personal knowledge, or do these statements like go somewhere?
That's a good question.
To somebody important, like to some institution.
It'll definitely be for themselves, because unless they're trying to get a loan, no one's really going to see it until it's the end of the tax year and you're giving it to your accountant to file for taxes.
So give us your expert explanation then for people who are like, yo, this sounds like a lot. I could just open me up a PayPal account, accept this money, and put it in my bank account and keep it moving. Why do I need to keep track of all these numbers? Why do I need to have all of these statements? Like, why do I need to do all of this when I could just do it much more simply?
So you don't need to necessarily, when you're first starting, absolutely separate account. 2 separate accounts, tracking your income, tracking your expenses. If it's going to give you a headache to look at your 3 financial statements, then, do as you please, but at least look at your income statement so that you can know what income is coming in, what's going out, what's your profit, because your profit is basically what you're taxed on. And if you don't have money saved for taxes, then you take it to your tax accountant and then they're like, okay, this is what you owe in taxes, and you don't have it saved. It's like, oh, wait. Wait, what? I thought that was for me. No, it's not for you. So that's why it's important, because one, you have to, it's pretty much the guideline when you're running a business to have a bookkeeping platform, because you need that data, because that is basically like your backup for your taxes.
Okay.
So when you have your taxes filed, it's like, okay, where is that data coming from? Is it something that you made up? No, it's not something I made up. It's something that I've been tracking throughout the whole year, and I have my backup, and this is my
because if the IRS decides to audit you, your memory is not going to be a sufficient backup.
Exactly.
So most of these bookkeeping softwares have the capability to create these 3 statements that you've talked about.
Exactly.
Okay.
That's exactly.
Do you have a personal opinion? I would assume that you do because of your role, but do you have a personal opinion about DIY bookkeeping versus outsourcing this process to someone who is well versed in it?
When you're first starting, especially when you're within your first 6 figures, I think you should absolutely take this on your own and DIY it.
Mm-hmm.
First, of course, that doesn't mean go about it blindly and try to just fill it out. Of course, get guidance to set it up for you and train you on how to do it properly. But I think you need to be intimate with your numbers when you're first starting, because it doesn't have to be so dramatic and so detailed and, oh, now I have to look at these 3 different statements. It could just be as simple as following up with open invoices, making sure that you're tracking your income and tracking your expenses to get your tax deductions, and then seeing, okay, what's been working this year for my business? My first 6 figures, of course, when you're starting your business, you're going to take whatever you can get because you're just figuring out what's working, who you're serving best. And you do that by being intimate with your numbers.
How often would you recommend someone be looking at their numbers? Like, is this something they should check every month, every quarter? How often should they be doing that?
I still to this day have a financial Friday. So every Friday, I'm looking at my numbers. It doesn't have to be like a whole long drawn out thing, because you also want to track your personal finances, right?
Mm-hmm.
So that you're keeping up with your personal budget. And just to segue into the personal budget or your personal finance, you need to also have a system on there too. And it doesn't have to be as serious as like an accounting platform, but at least tracking it so that you can treat your business finances the same way that you do your personal, so that you're keeping track of both of them.
Okay.
Because when you're getting into what should I pay myself, you don't know what you pay yourself until you know what you need to pay yourself from your personal finances, right?
As opposed to just choosing some arbitrary number that
Exactly.
could be or could not be meaningful for what you actually need to live.
Exactly. And then also, and knowing your personal finances can also give you a guideline on what you want your revenue to look like for your business, because you can reverse engineer it. You can say, okay, if I want to pay myself $2,000 for my business, I'm just starting, that means my business must make $4,000.
Right.
And then that goes into a book that I recommend for everyone who's just starting out in business, Profit First. It's a great book to help you understand how to like manage your cash flow so that you don't have to make your head hurt by looking at these different statements. Of course, you still look at, very important statements, but you can dictate what you do with your cash beforehand because you're taking the profit first.
I'm sure y'all will hear about that book again in another interview when I interview Jerisha Hawk. She's gonna talk about sales, and she always talks about profit first. So this will not be the last time you guys hear about that book. And then you mentioned something that made me remember that you talked about sales forecasting as something that you help your clients do. Do you have any suggestions for how the other people out here who are not your clients can go about forecasting, what they might need for sales, or like calculating like how that works?
Yeah, great question. So I mentioned a little bit about, when you find out what you want to pay yourself, you double it. Let's say, for example, if someone's just starting out, they want to pay themselves $2,000 from their business. That means their business must make $4,000, right? And then that means, okay, how much or what service am I offering to get to that $4,000? What is my pricing? What is my packaging going to look like? So say for this example, just to keep it simple, at $4,000, let's say I have a service that's $1,000. That's 4 people that I need to get in front of to make that amount for that month. And then when we go into a little bit deeper, we'll say, okay, based on that $4,000 or those 4 people, how many people do I need to get in front of to be interested to convert those 4 people? Let's say, as an example, you convert at 50%. That means 8 people that you need to get in front of to say, hey, I'm interested, to convert those 4 people to get the 4,000 in sales.
Right.
So that's a simple way to kind of like forecast it. But when the sun is setting and I'm just
I didn't even notice until you pointed it out.
But yeah, it's a simple way to forecast your sales for your business.
So for someone, say this is a service that I like have never offered for a specific amount before. Like maybe I did it for free and that's what I'm basing my business off of, or maybe I charge some like really low rate for a friend. Like I don't have a whole lot of experience with talking to someone, warm or cold and then actually converting them. So I don't have a good sense of what my conversion rate might be. Do you have any like estimates, or how could they find out what some estimates are for their particular field or industry so they could like know a good ballpark to kind of use for their sales forecasting?
If someone's going for just a real um kind of like a number that's like, okay, everyone at least converts their service at 20%. That can be somewhere where you can start.
Okay.
And then testing it out to say, okay, now it's 50. Okay, cool. And then in my opinion, if you're converting at like 80% or higher, that means you definitely need to consider raising your prices.
Okay.
So just kind of like figuring out what is your groove, what is something that you're happy with? Because if it's too low at 20%, that's relatively low, but let's just say that's just a standard for everyone when they're just starting out. And then if it's still at 20, it's like, okay, am I getting in front of the right people? Am I getting quality leads? Am I asking the right questions? Is my messaging on par to like getting those people in the door?
Looking at all of those factors that could be impacting that conversion rate, because there are a lot of factors that go into it, like you mentioned, your message, the audience of people that you're talking to or that you're attracting, and even pricing, depending on like whether that aligns with the people that you are trying to attract to the service.
Absolutely. And then, just to put this out there, your service conversion rate is going to be much higher than a product. So if you're selling a digital product, of course, that conversion rate is going to be much lower because you're getting in front of more people. And maybe 2 to 5% convert, or even 1 to 5% converts. So don't be disheartened when you find like a certain number when you're selling a product versus a service. So just like really drill into it and get just intimate with your numbers in that way too.
Are there any other tips that you see from people who come to you and like, their finances are just like jacked up? Like, what are what are some of the mistakes that they're making, or like something you would tell to somebody very early in their journey to kind of help prevent them from getting to that point later down the line?
That's a great question because honestly, everyone that I've worked with, a lot of times I'm that first person that they've worked with professionally, and they haven't tracked their numbers at all. And they're just doing their business out of like gut, what they think is right. So what I would say is talk to a professional sooner, so that, if this is causing you a headache to find out how to do your own bookkeeping or your own accounting, set up a call with someone, set up a session with them to help you just get started professionally, so that you can track it and and get trained, so that you're able to have a process so you can go in every week and do it correctly. And also setting the time to like, book a date with yourself every Friday to say, hey, for 30 minutes, I'm going to do my personal or business bookkeeping, and I'm going to figure out what's going on.
I know that you recommended that people who have not hit the 6-figure mark yet are getting a feel for it themselves and doing their bookkeeping on their own, so they have like an intimate relationship with their numbers. Are there situations where you feel like, maybe sooner than that 6-month mark, it would be more appropriate to outsource, or just to have like a conversation with somebody to get, like settled, and then you kind of take it from there?
Yeah, so either way, even if you're just starting, you can reach out to someone to help you get it set up if you decide to do it. But if DIYing is totally against your ministry, I would definitely suggest like a kind of like a affordable like bookkeeping solution like Bench.co.
Okay.
That's really affordable bookkeeping. It's for small business owners. And then you can even have like an accountant or someone who can look at your financials to help you understand what they mean Because it's one thing to have them done, but if you don't understand what they mean as well, then that's when you can tap into a professional to help you say, okay, what does this mean? How can I get to this, my goal, from based on what I have right here in front of me?
Yeah, and that's that story that you were talking about earlier. Like the numbers tell a story, but if you don't know what the story is that they're telling, then
Right.
Are they being, helpful for you?
Exactly. So if you do want to outsource, that's definitely an option. Do the affordable bench.co, but then reach out to a professional maybe quarterly to have like a strategy session with them to say, what do my numbers mean? How do I get to my goal? And that could be another great way to get support in your business, even if it's not monthly from someone professional one-on-one.
Okay. This was extremely, extremely helpful. Thank you for laying the groundwork of financials for our listeners. Can you let them know how they could potentially work with you or how they can listen to your podcast and learn more in detail about finances?
Absolutely. So first, thank you so much for having me on. This was so fun. I love talking about, numbers and my crazy background and how I got started. But yes, you can work with me via like a VIP day. If you are someone who is starting and you want to say, okay, how do I map out my future for my business? Even if I'm just starting or if I'm within my first couple of years in business and I know I'm not going to have someone monthly with my business. I'm sorry. And I know I'm not going to have someone every month in my business. And we also work with business owners, who are established as well. We work with them monthly. And we have a couple of courses out as well to help you kind of navigate that on your own. And you can find that on lovelyfinancials.com.
Awesome. Are you on any social media sites?
Yes, we are on Instagram at Lovely Financials and on my personal, the Iyanna. And if you are wanting to get some like free information, we have a podcast called the Major Margins Podcast.
Yes, and that is a very if you're gonna listen to the podcast, take some notes. Get paper and a pencil. It's not like I'm just gonna listen to this while I'm washing dishes type thing. You need to be ready to learn something because it's very detailed and it's very helpful. Like she said, it's very helpful. So thank you so much, Iyanna, for bringing your knowledge here to the Lazy Millennial Lounge. We really, really appreciate it.
Thank you so much, Megan.